Okay. Hello, everyone. Very glad to see you again. Let me open my computer on the YouTube channel first so that I can see the questions you have. And okay, just give me a second. Very, very glad to see everyone again. And I hope everyone's doing well. This is a very, very special time of our life. And it's just a second, I'm sorry. Okay, I'm ready here. Yeah, this is a monthly meeting. Here again, I want to show everyone what we have done lately and also introduce some frequently used features so that you'll get familiar with. And also, if you have questions during the session, you can ask me anytime, and I will be able to see the questions, and I will answer your questions as best as I can. Okay, now let's come to okay, let me do an overview first, and I will share you my screen here. And what I plan to talk about is in this outline. And first, I will talk about the new features we released lately. And then I will introduce some related features on the summary page. Then I will go through the all-in-one screener again. And also, I will talk about the market valuation page, the page that are related to the market valuation. And then I'll go through the search boxes. And again, hello everyone. If you just joined, this is Charlie Tian of GuruFocus. And I started GuruFocus 15 years ago. It has been actually, now we're going to the 16th year, will be our 16th anniversary actually in just a few days. And okay, now I come to GuruFocus website. And if you, okay, probably I need to share. Okay, let me share my, okay. I share the screen again, and if you look at the right side of the website column here, we have a new feature, new things or new service we're providing. It's called new member orientation. Actually, here you can schedule a time. We have this time slots here, and here you can schedule a time, and our support people will help you. If you have any question, you can join any of those sessions, and our support people will help you with the features of the website and introduce all the features we have. And if you have any questions, we will answer that too. And this will be done in 2 time slots on 4 days of each week. And so actually you can join, there are lots of selection of time, and you can find it at the time which is convenient for you, and you can join that session. I think that session will be very helpful, and it will help you to make the most of your GuruFocus membership. And also, anytime when you have questions, you can always look at this support menu here, and you can have we provide chat support, and also you can create a support ticket, and our technical people will help you with the support through ticket as well. And one feature we just lately actually introduced, we added actually to the summary page of each stock. If I come to, for instance, come to Apple stock here, and one thing we added lately is this chart. This is the return on invested capital and weighted average cost of capital. The basically it shows the historical return on invested capital and the historical weighted average return of the cost of capital. And usually you want a company which can get higher return on capital than their cost of capital. And it shows you a history. And you want the top part is always higher than the lower part, the absolute values. And this black line here is a difference between the return on invested capital and the weighted average cost of capital. And you want this black line always above zero. Of course, here I show Apple. It's a very good company, and it's always profitable. And of course, it will shows a very good difference between the return on invested capital and the cost of capital. And let's try another good company, for instance, Google here. Again, Google has very high return on invested capital and relatively low cost of capital. So Google can get positive returns on their capital. Let's try a different company, Tesla, for instance. Tesla, we know that it's a very hot company this year and has had tremendous gains of their stocks. And now let's look at their return on capital and the cost of capital. You can see that historically, because Tesla had always losses, so the return on invested capital was negative. And of course, they have cost of capital as they borrow. And even today, Tesla is profitable. It's making money. You can see here from this chart, from this here chart. And they're making money, but their return on invested capital is still lower than their cost of capital with Tesla. Now, things might be getting better. And let's try another company, more traditional company like Procter & Gamble here. Okay, Procter & Gamble, you can see that the return on invested capital is still higher than the cost of capital, and the difference is not as big as it is for Apple and Google. And yeah, that's return on invested capital. And let's try another company which is not very okay. This if you have any questions, okay, let's try Ford. Ford, we know that it's of course we all know it's a car maker and kind of struggling, and we can see that Ford has quite high cost of capital historically, and sometimes they have good return. Occasionally they have good return on capital. Mostly their return on invested capital is even less than their cost of capital. That's why the quality of the company is not very good. And okay, this is a chart this is a chart we added lately, and I think it's a very useful chart. And another thing we made some change is the Peter Lynch chart. If you're not familiar with Peter Lynch chart, and again, let me go with Apple first, because it's a good company, high quality company. It's relatively easy to see. And if you're not familiar with Peter Lynch chart, this is a chart that Peter Lynch used in his career during he was a fund manager at Fidelity, and he achieved 29% a year for 13 years. And this is a chart he used. He basically said that this is a price line of the stock. When the price line is above the value line of the stock, it's not a very good time to invest. And when the price line is below the value line, like here, and the black line here is Peter Lynch earnings line, the earnings line. When the price line is below the earnings line, it's a very good time it's usually a better time to invest. When the price line is above the earnings line, it's not a very good time to invest. And if we look at Apple, in this case, currently the price line is far above the earnings line. We have a linear log scale, and here you can also switch linear scale. It's more clear in linear scale that the price is far above the earnings line in Peter Lynch's earnings line. And we did some modification with this earnings line because in Peter Lynch's case, he always used a price to earnings ratio equals 15 to draw this earnings line. And we instead, we use the price to earnings median ratio, his 10-year median ratio to draw this line. It's a red line here. In Apple's case, it's above the Peter Lynch's earning line. We think that it's a more reasonable valuation method currently because these days the interest rate is much lower than it was during Peter Lynch's time. So, and if we switch to Google, for instance, and Google's Peter Lynch earnings line, this black line, is much lower than the median PE line, which is a red line here. And red line seems, the median PE and PE line seems to be a better indication of the value instead of Peter Lynch's earnings line in this case, because it's always below, far below the earnings, the price line. If we switch this to linear, and it's even clearer, Google price is always far above Peter Lynch's earning line, but it's in the middle. It fluctuates around the median PE line. And based on Peter Lynch's earnings line, we developed this GF value line, and we think it's an even better way, a better valuation, indication of valuation, and because it works for a lot more companies, and historically we did lots of testing, and it always mostly the price come back to the value line historically. And for instance, if we go to Ford, and this what we have is what Peter Lynch had, because Ford has very irregular earnings, and the Peter Lynch value line will not work really well because the earning line fluctuates a lot, and the stock price doesn't go. Stock price, it's very hard to actually make a determination of the value from this. Compare with Peter Lynch's value line, our GF value line is relatively accurate. When the price is above the GF value line, the price will come down mostly. When it's below the value line, like here, like in beginning of this year, it come back. So we think that the GF value line is a better indication value than the Peter Lynch value line and Peter Lynch earnings line. But Peter Lynch chart has been well known for many years. Okay, and again, if you're not familiar with the summary page, I think it's a very important, most important page for stocks. If you come to this page, you get an overview you'll get an overview of the quality and the valuation of any stock, actually. And in terms of quality, we have two areas. The quality is financial strength. Financial strength measures the balance sheet of the company, and then the profitability measures how profitable this company is, and then the valuation. So quality and valuation. Quality is the financial strength and profitability, and valuation is here the GF value. Okay. Someone asking, historical value are not updated within the latest years. I'm not sure what, if you're asking GF value, no, the historical value is not updated. And okay, then someone asking fair value feel about SP 500 in terms of percentage. Okay, I will get to that later. I'll get that later when I talk about the market valuation. Okay, this is summary page, and for summary page, you come down here, and this chart shows you the profitability, historical profitability of the company. I think it's a very good overview. Historical revenue and earnings. This is a balance sheet, the cash and relative debt, and here is a, if you're a dividend investor, you want to pay attention to here, if the cash flow can cover dividend, and the earnings, the net income, the cash flow can cover the dividend. You refer this chart, also the consistency between the earnings and the cash flow. Here is a chart again, as I mentioned, it's a earnings, it's a return on invested capital relative to the weighted average cost of capital. Okay, and this is area that lots of users asking. It's analyst estimate part. We have the estimate of revenue and earnings for the next few years, and it's a good number to refer to. And we also use this actually in our work for future valuation of the GF value line. We also use these numbers. And this part is, of course, Guru Trades and Insider Trades overview, Guru Trades overview, and we have the news here. And so this summary page, I think, yeah, please get familiar with the features we have there, and it can be quite helpful there. Okay, now as I mentioned, after talking about the summary page, I will go through the all-in-one screener again, because when we talk about the overvalued stocks, undervalued stocks, and where to find them, use our all-in-one screener. Actually, always, I think it's the most powerful screener on the internet. We have this screener will cover any fundamental ratios you can think of, and also some technical parameters. The fundamental parameters like sales, market cap, and this is a very fundamental one. Then the quality, the quality ranks, GuruFocus quality ranks, financial strength rank, profitability rank, and valuation rank. And then the parameters that measures the quality, like Pajowski F score, Benish M score, Altman Z score, current ratio, and any ratio. If you're not sure, if you want to find a ratio, you cannot see it, you can always use a search filter here. You can type in, for instance, ROC. It will show you all the related filters for ROC here. And even for ROC, we have the current value and 5-year median, 10-year median. And whenever you change any of these parameters, for instance, you said I only want companies which has more than 20 billion of sales. When you change that, the filter will work immediately. And you want median ROC more than 10%, and you just change it, it will appear here. And not only that, if you want to have the historical, you want to have historical, it can also filter with historical value. And you, for instance, you want last 4 years. Okay, this is a Premium Plus feature, and my account is not set up as Premium Plus, but when you set this and to current year, and you will be able to filter it also. So, and lately we also added ranking function. You can create your own ranking. You can create a customized ranking here, and ranking with multiple parameters. With multiple parameters, you will be able to save it and bring it up next time to rank as your own ranking method. It's a new feature we also developed lately, and Okay, that's historical ranking and customer ranking and historical parameter. And don't forget to click on these tabs, the valuation ratio tab, the valuation ratio, a lot of them, and also profitability, operating margin, gross margin, net margins, growth, the growth of different parameters, revenue, EBITDA, earnings, book ratio, and all of this. And of course, lots of people are interested in technical issues. We don't cover a lot of them. We cover some of them, but here we offer mostly fundamental ratios, P ratio, PS ratio, historical valuation. For technical ratio, we have some SMA, some of them. We don't have lots of them. And the dividends, you can also add insiders, dividends to it, gurus in it. And if you cannot find any of the parameters you want, and you can always create one with a customized. You can customize the filter. You can add a customized filter to create your own customized filter. And in this way, you will be able to filter it. And okay, that's a parameter. Now some questions. Okay, about the GF value again. I mean, historical data are available max up to 2018, not up to, correct. The historical data for GF value on the chart, if you, I'm not sure, this is what you're asking. The chart, I think, go back to earlier than that. A chart goes to 5 years, in 2016 to the future. Go back to about 5 years, and I'm not sure what you're asking. Okay, and will there ever be a student rate for premium account? I think that's something we probably need to do, but we just never get to it. Yeah, okay, I will definitely consider that again. We'll have some internal discussions. Okay, some Ivy found asking me to show the Premium Plus, show me a historical filter again. Okay, I'll show you here. And I just set up my account as a Premium Plus account. Now I come to the all-in-one screener again. My computer is okay, working on it. Okay, if, for instance, historical sales, and I want from 2015 to current year, the sales grow at least 5%. So I just select that. You can see that the results are already here. These are the companies which had sales grow 5%, at least 5% every year from 2015. And if I just want to limit it to SP 500, for instance, I limit to, it's called index membership. If I just limit it to SP 500 companies. Okay, now they're selected here. And these are the company within SP 500 that has been growing the sales every 5%, at least 5% every year. You can see it shows the historical sales also here. That's an example of how it works. Yeah, it's always indicated with a plus sign here. And this plus sign is for that purpose. And if you have any suggestion to make it more obvious to you, let us know. But that's what we thought it's a way of showing it. Okay, as said, asking about the ROIC to WACC chart. Okay, I'll show you again here. Because for any company, you want the ROIC higher than WACC, the absolute values. You want the return on invested capital is higher than the weighted average cost of capital. So, and this chart shows the green bars is the return on invested capital, and the red bar is the cost of capital. This blank line is the difference between them. And you can see that when this black line is above the zero line, we're getting positive returns on the invested capital. You always want the difference as high as possible. And we show this as a historical chart so that you get a better understanding of the company, to see to understand the quality of the company. Actually, that's why we do it there. And for banks, it's slightly different, because banks, the returns are not measured that way. Returns mostly measured with return on equity. And you can see this is Bank of America, and return on equity. It shows the return on equity relative to the cost of that capital. And okay, that's the bank, and it seems like this line has some problems here, and we need to. I would like the developer know, and so we fix this problem. The bank should be ROE minus weighted average capital. Okay, Ben is asking, do we have historical model portfolio? We do have lots of model portfolios. Actually, it's under the screener tab here, and here it says model portfolios and historical performances, and it shows you the historical performance of these different model portfolios. Actually the model portfolio of most broadly held portfolio, it has been doing very well. Actually, it has been beating the market lots of times. You can see that during the past 10 years, it outperformed market by about 4%, average 4% a year, as outperformed in last 1 year, 3 year, 5 year, and 10-year periods. And actually, I personally use this in my own portfolio also. And this is one actually most popular. We tried different ones, to be honest. We tried different ones, but this one is the most consistently performing portfolio, and I use it in my own portfolio also. And we rebalance it once a year. You can see here the historic performance of this portfolio. And I think we have a since inception number, maybe here. Okay. Over the last year, last 12 months, this year actually gained about 20%. The S&P 500 gained 13%, and this is the portfolio. We rebalance this once a year. Okay, and let me come to that question. WK is asking, we plan to show the stocks outside the US bought by gurus. We're showing that already, actually. We cover some Canadian gurus, and we cover most actually Canadian gurus, some European gurus as well. And not as many as US, not as extensive as US, but we have that already. Okay. Let me can I explain DCF tab? Okay, I'll explain DCF. DCF is, let me come to the DCF. Okay, let me come to Apple again. I'll go to the questions, go through the questions as many as I can. Okay, DCF, if you click on DCF tab, and it shows you the fair value already. Shows you fair value and shows the margin of safety, but it's based on the default parameters. And because it shows Apple has a negative 70% of margin of safety currently. But one thing you should pay attention to is a discount rate. It has tremendous effect on the valuation because interest rate is coming so low now, and we have been default to 12% discount rate, but currently I think you can go lower with the discount rate because the interest rate is so low now, and that's one parameter I think you should adjust. And of course, you can also adjust the growth stage years and terminal stage years, but all these are not as a tremendous effect as a discount rate. Also, you always need to pay attention. You need to keep in mind that DCF has a quite limited area application, and it works only for predictable companies. And then we have the reverse DCF. Reverse DCF means that if the current price is justified by its growth, we use the current price to calculate the expected growth for the future. Then we compare with the expected growth rate with the past 10-year growth rate. And if past 10 years can grow at this rate, it's more likely that in the future it can grow at this rate as well. Otherwise, it's quite unlikely. Okay, that's a DCF. Someone else asking about this VRTX. Okay, let me. He said, okay, it has financial strength, pretty good, but it has a possible value ranking. I will have to go into details. I'm not sure how. I'm not sure. Okay, I think the reason is probably the Binish M score. Binish M score, it has a -2, Binish 2.05. Binish M score usually, and it can be an indication of the accounting problem with the company. It's something to be cautious, and that's why we give this warning here. But you need to go back to the annual report to verify it, to do more research, and that's why we just remind you here. Although it shows that companies quite discounted, undervalued, but its accounting might have some problem as indicated by the Binish M score, and you may want to study further for the company, and that's why. Also, to be honest, if you look at the ROIC, right to WACC chart, it's not very good. This for this company, and you need to study further. Okay, and how does filter ranking? Okay, let me go back to the all-in-one screener again. Warren's asking about the filter ranking. Filter ranking is something we did a study. We tried to find which parameter is more effective, more correlated with stock performance for 12 months. And for the closely more correlated ones, we add a sum up filter here. And we just to let you know that there are a few like P ratio, 4 P ratio. And then we explain how it works. I think we have an article. It's here. Okay, so filter ranking indicates the higher the value of the filter, the higher the stock return. So this is actually very very different from what we usually think. We usually think that a lower PE stock will do better, but actually our back testing shows that over the past 12 months, a higher PE stock will do better, and higher PE rank, a stock has a higher PE will do better. So it's different from what we have been thinking, but we have a link here for details. You can read that detailed research article, and to get some idea how it works. Okay. About GF value part. Max is asking what drives future values. Well, the future value is driven mostly by two factors. One is a historical valuation, and second is the future growth. So future growth, and as I mentioned, that we refer the the future analyst data, the estimate data. We use that quite a lot. If an analyst predict that company will grow faster, and also the company has been growing faster historically, then we give it a higher value for future. Okay, and about inviting Lilo, we will try, but we have been trying different people. Not always we can get everyone. And Lilo is I know him personally, but I'm not sure he will still do it. But we will definitely try. Okay, and now I will answer the rest of questions slightly later, and I will go through the market valuation page here. First, as I mentioned, I will talk about the Buffett indicator page, and I think I talked about this page quite frequently. And this page is actually a very popular page on GuruFocus. Lots of people come here to refer this page, and it's actually the indicator that Warren Buffett used. He said it's the single most important indicator which measures where the valuation stands at any given moment. It's very simple, actually. It's just the total market cap over GDP of the company. And he used GNP, but the difference between GNP and GDP is really small. We use GDP here. Currently, the ratio is at 180%, 180.2%. And it's historically, if you look at this chart, historically, it has never been this high. And currently, it's the highest historically for many, many years, ever, actually. And if we assume that this ratio will revert to the mean for the last 20 years, well, that's what our assumption is. We can predict the future market return, which is actually shown in this chart. And the future, we can be very optimistic. It would be this red line. We can be neutral, which is this blue line. And we can be pessimistic, which is this green line. And as of current, it seems like we can only be optimistic, because if we're pessimistic, the return, it will be really small. If I remove that line here, okay, this yellow line is actually the actual return. The yellow line is the actual 8-year return. We can see that for the last 20 years, over the last 15 years, actually, it's two lines, the red line and the optimistic line and the actual return actually grow pretty well. They agree pretty well. And so probably the future, we can use this optimistic line. But even if we use this optimistic, we think that the future is very bright, market will do well. Even we assume that the market will only have about 1% of return for the next 8 years per year. So this picture is really very bleak. The future return is very bleak. The reason is because the current valuation is just too high. And we have a similar indication which we use. It's called Shiller P. It was invented by Professor Robert Shiller of Yale University. And with his indication, he said the Shiller P is currently 30% higher than the last 20 years of average. And from this, we can also calculate the implied future return, which is 1.2%, which is actually the results is the same as what we use when we use Buffett indicator. The return is actually similarly low. And so both Shiller P and Buffett indicator tell us that the return will be very, very low for the future because market valuation is too high. And then we can look at the global market valuation, because we think that, okay, the US is too expensive. Can we go to different countries? And we use a similar way of Buffett indicator. We use it for different countries. Here is the return of developed countries. Here is emerging market. Seems like Singapore, Spain will have higher, Hong Kong will have higher returns, UK, and US and Japan will have low returns for the future. For the emerging market, Turkey, Indonesia will probably have higher returns. Even China will have lower returns for the future. And that's you can check for this page if you want to know the details how it's done. Click on any of these countries. We have the Buffett indicator value for this country. For instance, for Singapore, it's here, and it's the ratio is really low, much lower, actually, the almost lowest point for the last 20 years. So that's why the market will return higher. And that's the global market valuations. Okay, now, and you can also check by sectors, because we mentioned that I mentioned that the market is overvalued, but you may think that some sector is cheaper than the others. And one tool we can use is the section we call sector valuation, Shiller P by sectors. And here we list the Shiller P of different sectors. You can see the energy sector has the lowest valuation currently, and not surprised, because we all know that energy stocks have not been doing very well. And also financial services such as bank stock hasn't been doing well. Consumer defensive has not been doing very well. And the Shiller P has technology is high, and communication services are probably some company. If you want to know which companies are, you can click on that, and it will lead you to the all-in-one screener page to show you which companies are included here. And you will be able to get into the details for the valuation. It will show you the companies which are included in that sector. And now, if you want to drill down industries, we have a page called Industry Overview also. Here, the industry overview is under all connected and linked under market here, Industry Overview. And it shows you the valuation, detailed valuation of different industry, different sector. For instance, if you are an income investor, you are looking for income, you want to look for dividend yield. And if you click here on here, you can see that tobacco product has the highest dividend at this point. It even higher, the dividend is even higher, dividend yield is even higher than the rate. So if you're a dividend investor, maybe that's something you can consider. And that's the industry overview. And if you're looking for relatively undervalued industries, you can click on PB ratio, for instance, here, financial service, basic materials. They are relatively undervalued as measured with PB ratio. And the PS ratio is actually one of my favorite, and you can click on this. And of course, then you can look at the Shiller P ratio of different industries, the financial service and the energy sector. Give you the valuation of different sectors. And if you click on this, I believe you will be able to come to the all-in-one screener page as well. We select the industry already. Okay, yeah, now if I okay, my screen is blocking some. So it will tell you, yeah, okay, which companies are included, which are companies are included in the financial service, and then compare with the P ratio and Shiller P, any ratio actually you can think of here, the PB, whichever you think is Okay, I click on the tobacco products. You can see that's a company we're familiar with, Philip Morris and Altria. And because this is dividend investing, you can check about their dividend, and you can sort by dividend like Vector Group and Altria. They all have very high dividend. And okay, that's about the dividend. Now let me look at the question again. Okay, Tanya is asking, new investors is asked to diversify, but gurus without lots of diversification. Yeah, Buffett has 50% of his money in Apple. Yeah, and okay, let me go through Warren Buffett portfolio. Let's go to Warren Buffett portfolio. I think it's also just a good way to go through these features. By the way, I've been using this search box if you pay attention to it. This search box is very powerful, and I encourage you to use it whenever you want to find new things, find things that you cannot find. Use a search box. Okay, now I come to Warren Buffett's latest portfolio. You can see that as of September 30th, he had close to 50% of his money in Apple stock and 10% in Bank of America, Coke. Apple actually, he built up this position over the last 3 years. If you want to know, actually just click on it. Click on this bar to show you the history and show you the history of when he started by Apple. Actually, 2016, the price he bought was here at 23. Of course, Apple now is about 109. You can see that that's the history he bought this stock. Apple stock, we also, here we calculate his average cost. Average cost per share is about $36. He has about 230% of gain on the stock. He has been doing very well, made lots of money with Apple stock because he is very concentrated. He put a lot of money in it. Warren Buffett historically has not been a diversifying investor. And when he was young, he put money into 2 stocks, 3 stocks, all his money. At one time, he put 70%, 75% of his money into Geico. And yeah, he has such confidence, he can do it. If you have a confidence in one stock, probably you should do that too. But I don't really suggest it. I think as us, I don't encourage overly concentrated portfolio. And I personally use a number of 25. I think between 20 to 25 will work for us pretty well. We are now Warren Buffett. And to avoid some big mistakes, you don't want to be too concentrated, too concentrated, but you don't want to be too diversified either. I think 20 is a good number. Okay, another question. Is there a plan to make qualitative analysis companies' market structure, strengths, weakness? We don't have the plan for that, but what we are doing now is we're getting new data for the company's operating data. It's called operating data, which includes, for instance, for retail stores, it will include the number of stores, the comparable store sales, the number of store closed, the number of store opened, for instance. And for insurance companies, it will be the combined ratio, the cost of insurance, things like that. So, and for every industry, there are specific industrial operating data, and we'll be getting that data. Actually, we're talking to data source, some data providers right now to get that data, and we'll provide that to the premium members. Any plan to use AI or machine learning to do analysis. No, we don't have plan for AI or machine learning. We are fundamental investors, and we want to focus on fundamental. Any more deep study about ETF? Not really. ETF, I feel that we did take a look. And for ETF, I think that most of the investors, when they invest in ETF, they are concentrated on a very handful of ETFs, although there are a lot of ETFs, but only a handful of ETFs are heavily invested by investors such as QQQ, SPY's, SP100 ETF, and NASDAQ ETF. Those two are the most popular ones. There are some sector ETFs probably, but they're all much smaller than those two. And I really personally don't think I don't know what to study for ETF. I just don't see anything to do with the ETF. Any more special situation investment? Not really. We have a page called the spin-off page, I think. Spin-off, if I cannot find it, I just type it here, spin-off. Yeah, spin-off list. We have a spin-off list where you can look at the recent spin-offs, the gains and loss. Somehow this page is relatively slow. Okay, I will. Okay, it's up now here, and it shows you the future, the historical spin-offs. If you click on that, you can even see the performance of the companies. The mother company is the parent company and the daughter company to see the stock performance since the spin-off. And of course, we have a guru, Joe Greenblatt, says that spin-off is a very good area to invest. And we provide this so that you can have a starting point to get in spin-off list. For instance, this RIAA Inc. It's a spin-off of car auction service. And indeed, this RIAA has a much better performance than the parent company and the stock. But those are tricky. In investing in spin-off, it might be a gold mine, but it can be tricky. You need to be careful. Okay, and what's the most effective to use guru information? I'm not sure what guru information you mean. Overall guru performance, a guru portfolio information, or is a fundamental research information here? And we have lots of tutorials. Actually, we have lots of tutorials which is linked in this under this tutorial link here. Where we have been keep doing it. We are. This I think not all of them are linked. You can go to our YouTube channel, GuruFocus YouTube channel. All the new videos are listed there, and you can always check there, check that, and it teaches you how to use the website, different features. If you're a fundamental investor, I encourage you to use our, for instance, use the summary page as I explained. And our 30-year financial page, which is very powerful, I think. It shows you all the historical values of different companies. And any of these rows can also be clicked and you can see a chart. We also have this Excel add-in I talked more about in Excel add-in last time. And you may want to go through that video and to see how to use Excel add-in to create customized research platform for yourself with Excel add-in. And also our interactive chart is very powerful. And I personally use interactive chart a lot. For instance, if you come to this page, it shows the historical price first, but you can easily just get the historical P ratio. And if I look at historical P ratio last 15 years, and the historical PS ratio. Okay, PS, of course, is much lower than P. If I remove the other two, you can see the historical PS ratio. You can also see the historical dividend yield. If you are a dividend investor, income investor, you want to check out the historical dividend yield here. And okay, in 2016, right before 2016, the dividend of Walmart was the highest. And I mentioned that if you're a dividend investor, you may want to look at Altria. If we take a look at Altria, and okay, the prices here, I want to show you the dividend yield. Okay, this is a dividend yield of Altria since 1986. So last 35 years of dividend yield of Altria. I can see that during the year 2000, the dividend was the highest, about 9.27% the dividend. And that time, of course, we had a tech bubble. And this year, the dividend was about as high as it was like 2 months ago. The dividend, if I just click on year to date, the dividend was even higher, actually 10.5 back in March. Even about 1 month, actually, last month, the dividend was 9.5, which was as high as it was during the tech bubble in 2000. So this is a very powerful tool. I personally use a lot. And of course, you can also do the valuation. If I just show you the valuation, okay, it shows the price of the last 15 years. And now you want to see how the price was relative to the historical median PE, which is you just click on it, it will show you the historical, if the stock is traded at historical median PE, how it looks like. And if stock is traded at historical median PS, how it looks like. And if it's traded at median PB, how it looks like. MOP is probably not a very good example for 15 years because it had a spin-off in 15 years ago. But if you look at the 10 years, it looks better. So these are the, of course, then you can draw the income statement, any revenue growth, income, all these fundamental parameters, and even you can put economic data in it. You can put GDP. You can add GDP to it, and GDP. Okay, gross domestic product. You can put lots of. You can put okay. You can put economic indicator to it, and okay, maybe that's not very oil. Okay, I'll check this again. I think here, click on here. If I try to put oil price to it, oil price, yeah, crude oil price. You can put. So you can add all the economic indicator data to it too. That it's a very, very powerful tool we use. As Ray Dalio still grew, yes, Ray Dalio still grew. When using GuruFocus function in Excel, the normal Excel spreadsheet slow down tremendously. When it's loading data, it can be a little bit slow, but you want to avoid too many cells in a spreadsheet. When the page has maybe thousands of queries, functions you're using, it will be slow because it has to interact with a server, remote server. It will be slow, and you don't want to put too many functions in one spreadsheet. Okay. That's about what I have. This video will be available in our YouTube channel again, and again every week Wednesday of 1 p.m. Central Time, we'll have Value Investing Live. We have been doing this weekly. Graham has been doing a very good job on it. We try to invest the big investors to the channel so that they can share with you And whenever you have someone you have in mind, you want to listen to what they talk about, you can suggest them in our channel or into the articles Graham write, and he will let you know. We'll try our best to get in touch with the guru and to get him available, to make him available in the YouTube channel we have. That's it. I hope everyone stay safe and good luck. And I will see you the first week of the new year. And at this time, I wish you all a Merry Christmas and Happy New Year for the next year. See you.